Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income stock. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. When it comes to a reliable high-yield dividend, consistency is the key. And no real estate investment trust can compete with today's income stock. Federal Realty Investment Trust, traded on New York Stock Exchange under symbol FRT. In fact, Federal Realty Investment Trust has raised its annual dividend for 55 consecutive years, the longest consecutive record in REIT industry. John?
Yeah, you're right, Mo. And by all accounts, it looks like Federal Realty Investment Trust will raise its payout again in 2023, making it the 56th straight year it has hiked its distribution. This puts Federal Realty in a rarefied company as a dividend king, and that's a stock that has raised its dividends for at least 50 consecutive years.
So let's dig right in. What does Federal Realty Investment Trust do?
Well, it was founded in 1962. Federal Realty Investment is one of the oldest REITs in the U.S. The company is a leading owner, operator, and developer of high-quality retail properties, located primarily in major coastal markets like Washington, D.C. to Boston and Miami, as well as San Francisco, Los Angeles, and Chicago. The company has 102 open-air properties, and they include 3,200 commercial tenants, covering, I think it's 25 million square feet, and that's equivalent to about 434 NFL football fields. It also has 3,400 residential units. The company's diversified income stream comes from groceries, limited service restaurants, full service restaurants, apparel, home, fitness, banks, hobby, sports, medical, retail, office, you name it. Basically, it runs the gambit of the REIT industry. Roughly 75% of its centers have a grocery component, and no single tenant accounts for more than 2.8% of annualized base rent. Moreover, only 8 tenants account for more than 1% exposure. The company's portfolio is always in flux too. It's in the process of a $515 million mixed-use expansion and project in Washington, D.C. and San Jose, California. It also recently acquired Kingstown Town Center in Northern Virginia for $200 million and the Pembroke Pines Shopping Center in Southern Florida for $180.5 million. And this past October, Federal Realty acquired a 47.5% minority interest in 2 regional shopping centers located in the Metro Phoenix area for $58.9 million.
John, there has been a lot of fears out there that the recession is coming. We've seen data that suggests that household debt is increasing, and not just that, there is a lot of, worries around what's happening in the commercial real estate market. But I was reading that Federal Realty reported strongest first quarter results in its 60-year history. What is happening here?
Yeah, absolutely. Income definitely matters in an inflationary environment. Consumers are still spending, but headwinds are impacting the shopping habits of what Federal Realty calls lower income shoppers, those with household incomes of $75,000 or less. Those consumers are actually trading down to less expensive items, while middle and higher income shoppers have been less affected by inflation. So as a percentage, 10%. As a percentage at 10%, Federal Realty income has the lowest percentage of gross leasable area with median household income of $75,000 or less. For comparison's sake, Kimco Realty Corp sits at 33%, and Brixmor Property Group, another REIT, is at 53%. This helps explain why it's able to report, as you noted, the strongest first quarter financial results in its 60-year history, with leasing volumes exceeding pre-pandemic levels by 20 to 30%. And I'll just give you some quick first quarter numbers. First quarter net income was up 6.6% at $53.3 million or 65 cents per share. And funds from operations were up 6% at $1.59 per share. During the quarter, it continued robust levels of leasing with 101 signed leases for over 500,000 square feet. And again, for context, that's like 9 NFL football fields. Federal Realty's portfolio was 92.6% occupied and 94.2% leased.
And John, let's talk about what's happening with dividends here.
Yeah, during the first quarter, Federal Realty Investment declared a quarterly dividend of $1.08 per share, or $4.32 on an annual basis. And that represents a yield of 4.58%. For comparison's sake, the US inflation is at 4.0%. As for Federal Realty Investment Trust stock, it's been a little volatile this year, up more than 8% over the last month and 4.5% year over year, but it's actually down 1.5% since the start of 2013. But again, that has more to do with rising interest rates and fears of recession than anything actually going on at Federal Realty. Yeah, Wall Street analysts remain bullish on FRT stock, and they're looking for it to make double-digit gains with a 12-month share price target of $108 per share to $125 per share.
John, thank you for such great insights on Federal Realty Investment Trust. REITs have taken a big hit over the last 1 year. There are a few reasons for it: rising interest rates and other related fears. But this downward pressure has simply put high-performance REITs like Federal Realty Trust. But this downward pressure has simply put high-performing REITs like Federal Realty Investment Trust in an even better trading range. Despite industry headwinds, Federal Realty Investment announced the strongest first quarter results in its 60-year history and provided impressive full-year guidance. While FRT stock may be trailing the S&P 500, it makes up for temporary headwinds with 55 consecutive years of dividend increases. This gives FRT the strongest, most reliable dividend in the REIT industry. That's it for today. We'll be back with another video soon. Stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.